What's up, guys? Let's talk about the best cryptocurrency exchanges for swing trading cryptocurrencies in 2026 and why swing trading is different going into this year. Swing trading lives between kind of day trading, where execution speed is what dominates, and long-term investing, right, where custody and macro matter the most. And swing traders tend to hold positions for days or weeks, sometimes even longer. And that changes everything, because in 2026, successful swing traders are not just competing for ultra low latency or micro spread advantages or constant screen time, right? They're competing on funding, holding costs, right? Liquidity during entry and exits, and platform stability across markets, risk controls, flexible leverage without forced liquidations. And swing traders can be directionally correct and still lose money if funding bleeds their positions, or the platform spikes spreads during exits, or margin rules change mid-trade, liquidity vanishes at the wrong time, right? So that's why exchange selection is paramount, and this is what we're touching on today. We're definitely looking at what swing traders need from an exchange. For example, right, the critical requirements are stable funding rates for futures, deep liquidity on major key assets and altcoins, right? Reliable margin on liquidation and liquidation engines, for example, low slippage on larger entries and exits, and also platform stability during high volatility events, and clear risk dashboards with margin visibility, right? So spot versus futures for swing trading, we need to make those critical distinctions, because obviously for spot swing trading, no funding cost, no liquidation risk, and simple mechanics, but it's capital intensive and no short exposure. When you're looking at future swing trading, capital efficient, yes. Long and short exposure, correct. Hedge flexibility, top notch. But funding cost and liquidation risks become something to think about. And most professional swing traders use futures, but with low leverage and wide liquidation buffers and strict funding awareness as well. So we've ranked the top platforms based on the funding rate behavior over multi-day periods, spot and perpetual liquidity on major pairs like BTC, ETH, SOL, for example, spread stability during volatility, and also margin liquidation, engine quality, right? You need to think about the platform uptime and reliability, as well as risk management tools and transparency and suitability for both spot and future swing trades. Let's get into it, guys. Check out the links down below, or you can also see the full review on our main site. Just check out the links and you can make sure you follow along. So the first one on our list is obviously Binance, just because it's the biggest exchange in the world with the deepest spot and futures liquidity, strong, obviously stable funding rates, strong margin liquidation engine as well, tight spreads during volatility. So you can benefit from predictable holding costs and clean entries and exits, right? So the trade-off is obviously it's a fully KYC platform, and conservative controls during extreme events seem to be what they tend to do. OKX is number 2, which is best for risk-efficient swing trading. I would say it excels where swing traders kind of care the most about capital efficiency and risk control and portfolio managing or margining, and competitive, often stable funding rates, and also strong liquidity or majors. Excellent risk dashboards is what you can expect with OKX, making it really strong for multi-position swing portfolios and also partial hedging strategies, and traders rotating exposure from across different assets. But the limitation is obviously slightly thinner liquidity than on Binance, for example. But at the end of the day, OKX is really up there, and I would definitely recommend that one. Bybit, definitely one of the ones that is fully focused on futures swing trading. You can swing on Bybit, clean futures interface, a strong BTC, ETH, SOL liquidity, competitive fees, and easy position managing as well. Excellent for futures, only swing traders who actively manage funding exposure. You can also tap into something like Coinbase Advanced, best for US-based spot swing traders, I suppose, with deep USD spot liquidity and no funding cost and strong compliance in custody. If you want to check out a platform like Hyperliquid, where you can do on-chain swing trading without any custodial risk, you're looking at an order book DEX model here with transparent funding mechanisms and no withdrawal delays, no KYC or custody risks. MEXC, an altcoin focused swing trading platform. You have to try this one because it works. with their broad altcoin listings, of course, aggressive fee structures and flexible futures markets as well. And it does require conservative sizing for longer holds, of course. But xt.com is another one if you want. No KYC swing trading, spot futures markets, low fees, no KYC. Like I said, if you're a privacy focused trader, xt.com. Check out all the links in the description, guys. Funding rates are the silent killers. Professional rule of thumb is to avoid holding positions through some extreme funding spikes, and also reducing leverage on crowded trades or rotating exposure to venues with calmer funding. A small funding leak over 10 to 20 days can erase kind of a correct directional call, man. So, common swing trading mistakes that a lot of traders make sometimes is ignoring those funding costs and choosing thin liquidity exchanges over leveraging on long-term positions, underestimating liquidation mechanics, and trading on unstable platforms. That's why you guys got to go check these ones out and let me know what your thoughts are. Check out the full exchange review on each and every one of these platforms. It's all on our main site. And like, share, subscribe, man. Check out the links in the description and get the best bonuses and discounts on your trading fees. Peace, love.